Well, this is Earnings Edge. I am Agam Vakil. We are taking stock of earnings from a whole host of companies. But at the moment, we have with me my colleague, Varsha, as well as joining us for the conversation is Supreme Petrochemicals ED, Rakesh Nayyar. Mr. Nayyar, good afternoon and thanks for taking the time out. Let's start by taking a look at how you are assessing this quarter gone by and what's the way forward here?
We have done well as far as the numbers are concerned on the EBITDA margins and our PAT is concerned. However, the volumes were flat, and the particularly because the exports were down in view of the slowdown in the European and the American markets, and also in Turkey, and the West Asia crisis. So the overall margins are flat, but domestic market has done well. There was a growth in that. And in the first half of the year, we are domestic volumes are up by almost 17%, and overall volumes are up by around 10.5%.
Mr. Rakesh, Varsha here. So
Yeah.
we've seen that West Asian crisis have impacted your exports. Now, what are you expecting when it comes to growth related to your exports and domestic market for say FY25?
See, the domestic market continues to do well, and domestic market we expect that we would be growing by almost 8 odd percent. But as far as the exports are concerned, because of this crisis in the West Asian market and the slowdown in the Europe and Americas, we don't see any growth there. Rather, there would be a negative growth there.
So
And
overall, yeah.
overall volumes would grow. Overall volumes, we expect it to grow by around 5.5% for the year now, and domestic market would grow around 8 to 8.5%.
Okay, so overall volume growth at 5.5%, and also
Yeah.
your contribution to value-added products. Where, I mean, what was the contribution in this quarter, and where do you want to take it for FY25 and 26?
See, our value-added products are they move in the range of 35 to 40% of our overall product profile, and it varies from quarter to quarter, the segment to segment, depending upon the product mixes. And we always working on to increase the overall percentage of the value-added products, but currently they are hovering between 35 to 40%.
Hmm. Right, Mr. Nayak, can you also tell us about well, your new ABS project, which I'm assuming at the moment you're looking at 70,000 MTA capacity as well in terms of addition. And of course, the other facility that we have in focus, which is your Haryana plant. How much are you looking to invest in here, and what kind of revenue contribution can it bring down the line to your consolidated top line?
The first line of the mass ABS, which is under implementation right now, would be completed by March 2025 now. And once it is completed in the full capacity basis, it would add around 1,000 crores to our top line. As far as our Panipat project, Haryana project is concerned, there we have acquired the land, and we are now working on all the pre-project approvals and the environment impact assessment studies and other things are going on. And it will be only the actual project implementations would start there towards the end of the or maybe the third quarter of the next financial.
Sir, but if you could also give us an idea about the kind of capital expenditure which is going to go in these expansions?
The project for mass ABS first line is around 550 to 575 crores is going to be the cost there. And as far as our Haryana project is concerned, there the cost expected is around 850 crores. And we would be meeting all of these expenses from our internal accruals and our investable surpluses which we have. We are a debt-free company, and we don't intend to borrow for these projects.
Also, when can we expect the normalized capacity utilization for both ABS and Haryana facility?
Haryana facility, see that there are many products coming up there. They would all be coming up in stages. So it will be starting from 27, 28 onwards, the projects will go on stream. As far as the ABS is concerned, it will go on stream in the year 25, 26. It will be there. But then I would say that the full contribution or the full volumes would be reflected in our annual accounts for the 26, 27.
Okay, and also, so let's talk about your margins. We did see dip in margins quarter on quarter. Now, I'm assuming this is because of the pressure in exports. Now, where you want to take this margin? What is the sustainable margin, EBITDA margin?
See, the EBITDA margin in this quarter, we have, there is no dip as I see. We have done better than the corresponding quarter of the last year. If you look at sequentially, because there's a, see, the product is, there are peak months, there are lean months. So when the monsoons are there, they are the lean months. Otherwise, our EBITDA margins in this quarter have fairly stable. And very difficult to predict the considering the international markets and the international environment what the final EBITDA margins will be there for the year.
Right, sir. You briefly alluded to your debt levels. On a net debt basis, are we assuming that it's going to remain zero? And going forward, are we looking at a potential increase considering you have such a favorable debt to equity ratio?
No, we don't intend to borrow at all.
All right. All right, Mr. Nayyar, we leave it at that. Thank you so much for joining us and taking us through the earnings.